What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the Ortex short interest and utilization data, specifically these cost to borrow numbers that we're seeing increase across the board on both AMC and GameStop as well. Now, this kind of trend that we've been seeing with a lot of these stocks is so important to seeing the price run-ups that we really want to see. Every single time in the past where we've seen big price movements to the upside, we have always seen the cost to borrow start to skyrocket, and that's basically what we are seeing right now. Combining this with a couple of other factors in terms of the technicals that we need to see on AMC, some different price levels that we need to kind of break in order to really get that momentum going back to the upside. We are in a really solid spot right now. Even though we're trading at $15.88 right now, $15.86, we are in a solid spot, I believe, to start that kind of next move up over the next couple of months. We're also going to be touching on the max pain and the options chain going into this week, next week, and the week after as well. So before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, even on a day like today, where the market is chopping around all over the place, the people trading with 1348 have consistently been the winning traders in this market. If you do want to learn a little bit more about this strategy, make sure you check out that link down below to the Discord. You can hop in there, learn the strategy, and if you would like to join Premium to get alerts on the 3-minute time frame on 1348 crosses, the 15-minute, the 30-minute, the 1 hour, 4 hour, daily time frames on 350 plus stocks and cryptos, and get access to all of the private live streams with me, Review Dork, and TMI, make sure you check out that link down below. So AMC closed the day today at $15.86, currently down a little bit after hours. I'm recording this pretty close to after the market is closed, so we're going to see a little bit of kind of flickering around. But when we come over to the Ortex update over here, and let's give a quick refresh to this to kind of see where we're at. So we had a net return of shares today of about 958,000. Now, the cost to borrow numbers down here are a little bit weird, just because at one point in the day, we were seeing these average cost to borrows at 3%, and then they kind of reverted back down. So not really sure what to kind of make of that, but right now we're seeing the average cost to borrow at 2.45%. Again, that is slowly starting to come up. Again, we have 133 million shares on loan, about 108 million shares estimated to be sold short. So they do have a lot of ammunition that they can kind of use against us at any time. But the short interest right now is still very high, right around that 21% mark. Now, let's get into a little bit of this options chain analysis before we go over some of these price levels, because I think a lot of people are really starting to get excited again about a potential move to the upside. Now, nobody really knows when this is going to happen. There's a lot of projections out there on what people are estimating and when we could see this move. But again, nobody really knows. So we're just kind of here to give you guys the information and just kind of show you guys what is going through our minds as well. So when we come over here, we see the max pain for this week, $15.55. Again, if you guys don't know what max pain is by now, what it is essentially it's the price where the most amount of options, calls, and puts are expiring worthless at the end of the week, benefiting market makers and institutions selling options the most and hurting mainly retail investors, the people who are buying these options. Now, when we come over to Untitled Chapter over here and taking a look at the amount of options that are in the money, again, there's nothing too crazy going on this week just because it's the week after that monthly options expiration period. But when we come into that April expiration date, I think people are really starting to see the power of at the money and in the money options and what that does to the gamma potential. And no matter what you want to think about options at this point, I think people have educated themselves enough to really understand the power of options for these price movements to the upside. Yeah, buying those crazy YOLO options at the furthest out of the money strike is not really going to help anybody's cause, and you're basically giving a nice little donation to the market maker. But those at the money, in the money strikes, if we start to see those pile up, that is going to be a really, really strong side. Now, when we come over here and take a look at the chart of AMC using 1348 to kind of give us an idea of when we could see a potential breakout or a very significant run, Well, when we look at 1348 over here, the yellow line right here is going to be this 200 exponential moving average. Now, it broke down below this in November, and we have not been able to get above it since then. We're pretty close to this 200 exponential moving average right now. We have seen that 1348 cross, which is a really, really solid indicator of momentum. And if we can cross above this level right here, this 200 EMA, and get some nice closing 4-hour candles above it at 1769, well, we could make a nice little run. But there's kind of another price level to kind of give us even more confirmation and to be really sure that we are headed to the upside. And that is going to come from this daily time frame over here. We haven't necessarily seen that 1348 crossover on the daily yet. When that happens, that's probably when we're going to be starting to run over that 200 EMA on the 4-hour chart. But looking at the daily time frame here, if we can get above this 200 EMA on the daily chart, that's at about 2550 right now. That is going to really give us a lot of confirmation that we are going to start heading to the upside. Now, again, with what's going on in kind of the global macroeconomic environment right now, some things definitely can pop up. We saw today Jerome Powell was speaking, and he kind of gave an indication that we are headed towards a 50 basis point hike in May. The market didn't really react positively to that, and it really started to sell off kind of in the middle of the day. But it ended up rallying back up. We still have that Russia and Ukraine conflict over here to kind of really kind of weigh down the market. But other than that, if the market kind of gives us a little bit of headway, we could really be in some solid price action. Now, let's kind of get into this concept of these forced share recalls and what's going on with these cost to borrow. So we're going to go back to Ortex and kind of give a little bit of an analysis of what is going on here. So AMC's, remember, is 2.45%, and it is trending up. We're seeing days to cover shoot up as well, 2.99. That is very, very high comparatively to what we've seen in the past. Days to cover is essentially, it's sort of measuring how easy it is for these shorts to get out of their positions with the current short interest and an average volume over the last 3 months. So right now, it would take them about 3 days in order to get out of their position. It would probably be a lot longer than that just because there's going to be a lot of other orders coming in, but they're kind of stuck right now. And we're seeing this cost to borrow go up as well. Now, the utilization number is kind of interesting. I don't necessarily trust these utilization numbers right now because we're still seeing the shares on loan kind of bounce around, keep trending to the upside, but we're getting closer to that true 100% utilization. But remember that article and that research report that we've been talking about from the University of Notre Dame. Any stock that is a utilization above 75% has a 1 in 26 chance every single day to get forcibly recalled. Now, AMC's cost to borrow is going up. The shares on loan are going up. But remember, a lot of these stocks, AMC, GameStop, Bed Bath & Beyond, and a couple of these other stocks as well, are all moving kind of strangely together all the time because they're all linked up. Now, when we take a look at what's going on with GameStop over here, this is one of the things that I want you guys to take a look at. Now, this is not meant for anybody to come in here and say that, oh, one of these is better than the other. But the fact that all of these stocks are moving together, when you see the data on one of them start to get really, really, really strong, and one of them could potentially start moving really aggressively to the upside, it means really good things for the other one as well. And what we're looking at here on GameStop is a 17.05% average cost to borrow. That is huge compared to what we have been seeing in the past. Now, I want you guys to think about this right here. So, these shorts, these newer shorts that have been coming in when the market has been selling off, have kind of been in these stocks since November. When we take a look back at AMC's chart right here and we look at this in November, the stocks were trading at like $41. So they've made a decent amount of money on these new short positions that they have entered. Now, you're seeing these stocks rising in their cost to borrow, and you're also seeing these stocks start to sell off aggressively, but they just bounce. They're not really making newer lows anymore or lower lows. They're just kind of coming down with the market and then bouncing aggressively right back up. That's not good if you are a short trying to continually push something down as far as it can go. Now, if they want to take out more shares on loan, they're going to be paying a higher cost to borrow. If they are going to be trying to basically hold these short positions for any extended period of time, well, the cost to borrow is going to go up on them as well, just because these are variable rates. So here's what this leads to. Either the voluntary close of these short positions or the shorts that have been in this for a very, very long period of time that have somehow been able to skirt some of these margin calls eventually are going to be forcibly recalled because they're not going to have enough capital in order to continue to pay these cost of borrows, or they're just not going to want to because it doesn't make any economic sense for them to continue to pay these super high borrow rates, and the stock isn't really going to make those newer lows. So that is going to wrap up this update on AMC, GME, and what kind of what's going on with sort of the technicals that we're seeing here and the cost of borrows that are absolutely going crazy. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.